Hey guys, how are you? All right, let's do some trade reviews here. We're gonna go over all my trades today. I had 3 trades today. I traded live today, no paper trading. First time trading live in about a month and a half, getting back to it slowly. So basically the way I'm approaching it is I'm trading in a sample set of 20 trades with a fixed risk on all the trades. So I am prepared to lose the dollar amount on those 20 trades. So basically I have a few setups that I trade, and every time I see the setup setting up the way I like it, I trade it. I do not hesitate. I do not think twice. I execute it and that's it, okay? Because I have the 20 trade sample set, okay? Now, let's go over some trades I had today. So I had 3 trades in total. All 3 ended up being losers. The first 2 were in fact winners to start the day. And guess what? I let them become losers. So we're gonna analyze how I managed to do that, okay? So the first trade was on Roku. You can see here, Roku 9:56 a.m. February 119, 118 put spread, which means I shorted the 119 puts right here. Okay, so I was buying the dip on Roku. And guess what? That trade was profitable all day because Roku, once it hit the low of the day, it just chopped around all day. So this put spread that I sold around $25 here, up here it was worth like $12 or something, and I didn't take it off because I just didn't, where I probably should have taken it off when I just saw it starting to lose this 5-minute uptrend. But I decided that I would keep it on and hope for a further drop in volatility. And as you can see, that is exactly what happened. We got a further drop in volatility all day long until it started to pick up again. Now, my mistake in the trade was not taking profits at any moment during the day until it was in the red. And it ended up being a tiny loser, less than what I was originally risking on the trade. But it just goes to show you that if you don't take profits, you got to take profits. So just briefly, I'll tell you why I decided to buy the dip with a put spread instead of a long call spread, a call, for example. And the reason is simple, is because when volatility is high, you want to be profiting from a drop in volatility. You want to have volatility on your side. That's the simple answer, okay? A friend of mine was telling me, he's like, why don't you just go long calls, or why don't you just go long puts? But he doesn't understand that volatility needs to be on your side when you're trading options. It's like the most important thing. If you go long a call and the price is just grinding higher slowly, your premium is going to go up, but it's also going to go down based on volatility dropping off too. So you're going to lose money on volatility. So there's cases where a put spread is better than going long calls, even if it's a short-term trade, 10 to 15 minutes long, okay? Volatility can drop significantly in 10 to 15 minutes. You would be surprised, okay? As you can see here, at 10:18, volatility was at approximately 3.95%, and in 10 minutes, it dropped approximately 0.1%. So whatever your Vega number is on your options chain, which means that the amount that the option is going to move based on a 1% change in implied volatility. If your Vega number is 20, for example, and the thing moves by 0.1%, that option, each contract, you're going to lose approximately 2 or 3 cents on each contract. And that can add up, especially if the stock is not moving in your direction, okay? So this is why it's crucial to understand volatility. Okay, I'm going on a tangent here. So basically my mistake was not taking profit. That's it. Simple. I went in with 1 contract. I should have gone in with 2 contracts, taken off one of them when I saw this bear action here, or at least taken off one when I was in profit towards the end of the day. I ended up holding, and I took it off when we broke below 119. Actually, it was below 120. When we broke below 120, I was pretty much out of the trade, okay? Now, I also traded SPY puts, also, which were very profitable at one point in the day, and I did not take profits. Why did not I take profits, guys? That's why I'm making trade reviews, so that I can get this stuff into my head, okay? And it's very important that you do your own trade reviews, guys. Very, absolutely important. Don't let anybody try and tell you how to trade your strategy, okay? Because you will be the ultimate determining factor if the strategy works for you or not, okay? People say trade what works and don't trade what doesn't, but you also have to trade in a way that is comfortable for you, okay? Now, look at the spiders here. At 10:33 a.m., I bought a put spread because, again, I thought volatility was high and volatility was going to start dropping off at this point. okay? So basically I was scaling in here. I scaled in right here at 1033, assuming that 333 was going to hold and my stop loss was going to be below 333, okay? And as you can see, my stop loss did not get hit here. And once I saw it holding, I added another contract to that position, which I scaled in a little bit more. I improved my cost basis. So at that point, SPY grinded higher, and guess what? IV dropped off considerably. So this position that I had sold around this area was now in profit. And again, I did not take profit. Why? Say in the comments below. Chris, take profits next time. And guess what? I paid for it after. Look, I should have been out of this thing as soon as SPY lost the 5-minute uptrend. Look at this. As soon as we lost the MAs, and we're chopping around here around 12 o'clock, I should have been out. Buy. Good. Okay, that's really funny. So I went so hard that the sound just cut off. All right, guys. So yeah. So lock in your profits. Simple as that. As soon as SPY lost the 5-minute uptrend, I should have been out of those short puts, or at least half of the position. Okay? Now, these are lessons that you learn. Look, there was nothing wrong with my entry, okay? I respected my risk. I went in when I thought it was in based on my trading setup. That was great. And in fact, the trade ended up being a winner. The only problem was I didn't take the profit when it was there for me. When the market gives you money, take it. Take the money and run. All right, guys. Now, the last part of my day here, after I stopped out the spiders and the ROKU for tiny losses, I decided, I saw this on Apple. Okay, Apple was dumping, absolutely dumping below 315. Okay, I saw this, an absolute bloodbath. First green candle, not first green candle, first close above the 4 EMA, I was long. Okay, at, hold on, 1:53 p.m. I was long right here. I was long with my stop below 311. Guess what happened? My internet cut off as soon as I got filled on the order. How's that for a panic, eh? So there you go. So actually there was a bit of a window for profit here above 312. And as you can see here, look at what volatility did. So you can see that it was at approximately 1.73%. And it dropped all the way to 0.70%. So it dropped about 0.3%. So will that affect your premium? Maybe. Why don't we take a look at the options chain real quick just to see what the calls did at that point. 7 days to expiry with a 10 delta. So this is the 327.50 call. And you can see here that it moved from approximately 53 cents to 57 cents. Or 58 cents was the high of that candle. So in this move right here, there wasn't much profit to be made. And as you can see after that, they got wrecked. They went from 50 and then they were down at 45 within minutes. Got another little pop after that. Anyhow, so that was a failed dip buy on Apple. But because I decided to short it with puts, there was more leeway in the trade to be wrong. Okay? At no moment in the day did I ever feel intimidated or stressed by the market information, okay? I only felt that way towards the end of the day when I realized that I didn't take any profits, and that's when it got to me, okay? So when I had the third loser on Apple, I cut it and then I was done. Okay, and then I said, when I get home, I'm gonna do a trade review on what the hell just happened today. And that's it, guys. So if you learned something from this video, please give it a thumbs up, and I will see you in the next video. Cheers.